It's Thursday, April 27, 2023. A lot to talk about today. Dow Jones up over 500, NASDAQ up almost 300. Seems like everything is fine. Life is good. There's no problems. And things couldn't be further from the truth. We do have a lot to talk about today. Here's a report I was just reading, just came out a little while ago. Intel reports largest quarterly loss in company history. Results on Wednesday that showed a staggering 133% annual reduction in earnings per share. More good news for the markets. We saw really a massive rally today based on nothing other than more people losing their jobs, the economy slowing down, banks in trouble, and the news continues to get worse. And it seems that all this bad news is good news for Wall Street. It is so detached from reality, ladies and gentlemen. But why do you think that the markets soared today? Why do you think we saw this rally today? I believe, and this is my opinion, I believe that markets right now believe that this is setting the Fed up for a pause and a reversal. I believe really that the markets are hoping that the Fed is about ready. Maybe we'll get one more rate hike next week, and then the Fed's going to pause and reverse. I don't think that's going to happen, but this is what I think the markets are hoping is going to happen. And I believe that this is what a lot of this rally is based on right now. But what we do know for sure is that the markets today didn't rally because the economy is booming. Markets didn't rally today because people are making more money or the job market is getting better. No, it rallied because of hope. Hope that the Fed, because that's all that matters now, is the Fed. Hoping that the Fed is going to pause and then reverse course. The same exact thing that got us into this mess, we're going to go back to, that the Fed's just going to start lowering rates and printing more money. Isn't that why we're in this position right now? But this is what the markets believe. This is what the markets are hoping for. Will this happen? What do you think? Comment down below. Will the Fed pause? I don't think they're going to pause next week. Will they pause after next week? Do you think they'll pause next week? It's certainly a possibility. I don't think it's going to happen. But do you think at some point this year the Fed pauses and reverses course? Love to know what you think. Maybe I'm totally wrong, but I don't think they're pausing, and I don't think they're reversing course. I think we have 3 more rate hikes, possibly 2 to 3, but I think it's going to be 3. And then at that point, they may pause a bit and see what happens. Today also, we got the jobless claims for last week. 230,000 people filed first-time jobless claims. But that's actually lower than the week prior by about 16,000. So heading in the opposite direction. So I don't think the Fed has any other option other than to raise rates. We still have a lot of inflation. And if they're telling us that they want to see 2%, well, they got a long way to go because we're not even close to 2% inflation. Lyft to cut 1,072 employees or 26% of its corporate workforce. Right now, if we take this number 26% on top of the layoffs back in November, that's a total of 36% of its workers that have been laid off since last November. 36%. Markets up today. I guess they love the news. The hedge today, U.S. pending home sales plunge in March as rates rebounded. So we saw existing home sales, pending home sales down 5.2% month over month and 23.26% year over year. That is a huge number. And I think right now what we're going to begin to see, and they keep telling us it's all about the inventory. It's all about the inventory. No, it is about jobs. It is about qualified buyers. I like how they always like to twist it and spin it. If you want to buy a house today, there's a house out there. You can buy a house today. The pool of qualified buyers, though, that's going to be much more difficult to find. More people are getting cars repossessed. More people are falling behind on credit card bills. They're falling behind on utility payments. Their credit is being destroyed. And you cannot buy a house with bad credit. And you got to have some money to come in as a deposit. People with a savings rate of around 3%, people cannot save money on top of the high rents that they're paying, then save money to buy a house. It's getting very, very difficult to do. So they can talk about inventory till they're blue in the face. What about the inventory of buyers? That inventory of qualified buyers is going to continue to shrink as the inventory of listings, new homes, existing homes, is going to continue to rise. Here's another one. Target expands locked merchandise cases to hit back at shoplifting. San Francisco, California, Riverdale, New York. They're putting personal care products behind these plexiglass vaults, basically, locked behind these plexiglass shelves. And I have a feeling that we're going to see a lot more of this. And eventually, it's not going to just be personal care products. It's going to be literally everything in the store. If you want something, you'll probably have to put a card in the slot in order to get it out, like they used to with snacks and cigarettes and things like that. That's what it's coming down to, because nobody will be working at these stores. You'll just walk there, put your credit card in or your ATM or whatever, and press a button. And if you need some socks, or you need some toothpaste or some deodorant or some razor blades or whatever, you just press a button and it'll fall in the slot and you pull it out. That's what it's coming to, because people are absolutely out of control. When you look at what's happening in San Francisco, the shoplifting in New York, Chicago, LA, it's happening all across America. And it's going to continue to spread outside of the cities into the suburbs, which we've already seen. And when all those stores are gone out of business, guess where they go next? They go to your house. That's what's coming very, very soon. So when things are locked down, then they're coming, or they're just, the stores close or the shelves are empty, then they're coming to your house. So make sure, ladies and gentlemen, that you have security. It's going to be so important. I watch other people, other channels, and, we can sit here all day and say how bad it is and that the world's going to come to an end and that, everything's crashing. But what happens when somebody comes to your house? What happens when somebody wants to take your assets? What if somebody wants to do physical harm to you? Nobody really wants to talk about that. I know it's scary, makes people feel uncomfortable, but right now you must be taking action to protect yourself, your families, your assets, your home, etc. Because there are some really, really bad people out there that have absolutely no problem taking everything you worked for. So be very cautious where you're at, where you're going. Use situational awareness even when you're home, and have a plan. If somebody breaches that door and gets in, they pass your alarm, they pass the cameras, now they're in. What are you going to do about it? Because the police aren't coming. So you better have a plan. And the more planned out you are, the more action you take right now, the better the odds are that you're going to survive this. Here's another one. Fox Business. Average rate on long-term mortgage climbs for second straight week. Here in the article, they have the 30-year fixed rate at 6.43. I checked bankrate.com, had it at 6.93%. So, this is with good credit. You don't have good credit, you don't have a 20% down, you're probably paying around 8% right now, maybe even a little bit more. Who in the world is doing that right now? I cannot express enough that this has got to be the worst possible time to buy a home. It really is. This is the worst possible time to be taking risk. This is, in my opinion, the time to be extremely, extremely defensive. This is the time where you stack cash, you stack assets, you stack the essentials, you sit back and you wait this out. There's just so much uncertainty going on. And when you see the stock market today, we see the Dow Jones up over 500 points based on absolutely nothing but hope that the Fed is going to turn around and reverse course. Scary, because they're continuing to just inflate this bubble. They let a little air out, then they inflate it right back again. And this just means when this thing goes, it is going to be unbelievable. It is going to be apocalyptic when these markets crash, because they have jacked these markets up for so long, and they're still trying to do it, and they're spending so much money doing it. And there are so many people that watch the markets and believe it's reality, and they're making life-altering choices based on these fraudulent, manipulated, rigged markets. and they are going to get absolutely wiped out. And there are going to be people, there are going to be wealthy people too, who are going to be wiped out here too. And when I see days like today, it just verifies how rigged and manipulated these markets really are, and how dependent these markets are on the Fed to come in and save them. Again, these markets aren't up today because the economy is booming. You know that, I know that. It's not, the markets aren't up because the job market's booming. We're watching people every day by the thousands lose their jobs. These markets are up because they're hoping for the Fed to rescue them. Here's another one today. Wall Street Journal, fire sale, $300 million San Francisco office tower, mostly empty, open to offers. This is 350 California Street. This building, 4 years ago, was worth $300 million. Let me repeat that, because there's people out there that say everything's going to continue to go up. Homes are going to continue to get more expensive. Real estate's going to continue to get more expensive. Everything is going to get more expensive. And I look at it this way. I think we're coming into a time where we're going to see deflation and inflation play out at the same time. And this is another example. I think we're going to see energy go up, we're going to see food go up, and we're going to see commercial real estate go down. We're going to see the price of autos go down. We're going to see the price of homes go down, RVs, boats, luxury watches. All this is going to go down while energy, food, commodities going to go up. So this is what I mean when I think we're going to see inflation and deflation. And somebody a couple days ago just told me I was completely wrong. Maybe I am. Comment down below. Is it possible we're going to see both? Because we're seeing the cost of everything pretty much going up right now. But then we look at commercial real estate. 350 California Street, a building 4 years ago worth $300 million. They're saying right now it might sell for 80% less now. It says bids are expected to come in at $60 million, real estate brokers say. This is a Wall Street Journal. Nearly 30% of San Francisco office space is vacant. And the stress of office buildings is having a huge, huge impact on the financial sector, from the nearby stores and restaurants all the way to the regional banks that made these loans on these commercial buildings. Huge, huge impact. And you ain't seen nothing yet. They don't want to talk about it. They don't want to tell you about it. But think about the billions and billions and billions of dollars tied up in these buildings. Hedge funds, pensions, investors, bondholders that are all invested in these ghost towns that are worth 80% less than they were 4 years ago. And you don't think we're going to have a reckoning coming? You're sadly mistaken. I would put down the Kool-Aid. Stop drinking the Kool-Aid right now. If you think the price of homes isn't coming down next, sadly mistaken. They said that this could never happen in commercial real estate. When did you ever hear a $300 million office building in San Francisco, prime real estate, now expected to maybe sell for $60 million? They'll be lucky if they get $60 million. Think about that. And people think that this isn't coming to the housing market. Look, we have so much inflation. Mortgage rates going to continue to rise. Interest rates going to rise. People are going to continue to lose jobs. Savings rate continue to go down. Opportunity is shrinking. And so this is why we're going to continue to see commercial real estate and housing get absolutely destroyed here, decimated without a doubt. IRS plans to hire gun-carrying special agents in all 50 states. This on Fox Business today. Please comment down below. What do you think about this? Now, they're saying that this is going to be in all 50 states. And in the ad, it says, must be willing to use force. What do you think about this? The IRS now, not now, but being even more armed than before. Is this necessary? Does this make you feel comfortable? And it's sad that we're seeing more and more government job openings, and we're seeing less jobs in the private sector. And so remember, it's nice to see some jobs out there, but when they're government jobs, guess who's paying for these jobs? You're paying for them. I'm paying for them. So our taxes are going to go up in order so we can have more IRS agents with firearms knocking on our door. Isn't that wonderful? So let me know what you think. That's very disturbing in my opinion. And in the ad, must be willing to use force. Unbelievable. So I'm going to leave it there today. So much happening. People, I'm sure, are going to feel very complacent now because they believe everything is okay. So we've got continued banking trouble, but the market's up today, right? So as long as the market is up, we're going to forget about the banking crisis of a few weeks ago. We have First Republic now in big trouble. A bank whose stock was selling for $120 6 weeks ago. Today it's $6. Yesterday it was $5.69. They're not out of the woods. They're in big, big trouble. And who's next? What bank is next? So it just amazes me that when you watch these financial channels, the cheerleading that goes on, nobody talking about what is happening in the banking sector, nobody talking about First Republic today. Everything's fine. Everything's fine. Very, very scary, ladies and gentlemen. To ignore what is really happening is very, very dangerous at this point. And I just shared a few articles with you today. Again, comment down below on any of these articles or any of these topics. But today, it's frustrating to watch these markets do what they do on a day like today when there's nothing behind it. There's no fundamentals other than the hope that the Fed is going to come in and save the day. The Fed's going to come in and reverse course, start printing money, lower rates, and send us even deeper into debt and cause even more inflation. You want to know how you get to a third world status? You get there by doing exactly that, by printing more and more money, lowering rates, and ignoring the dangers. And people want a quick fix right now. People don't want to feel the pain, especially people that are heavily invested in these markets. They want the Fed to come to their rescue right now. Nobody wants to feel the pain. But there is real serious pain coming, ladies and gentlemen. These markets are bigger than the Fed. These markets are bigger than the United States of America. These markets at some point are going to go absolutely out of control. Remember, it just takes that one last snowflake to land on the mountain and start an avalanche. And that snowflake is coming. I don't know when it's going to hit, but when it does, this is going to be a massive, massive financial avalanche. And I hope you're prepared to deal with it. God bless.